JJ the CPA here. Hope you are doing well. Hey, wanted to talk about single member LLCs. Been getting a lot of questions on this. And for this video, we're talking about the single member LLC that is, in essence, not filing a separate tax return. So you can be a single member LLC, and in essence, you're going to be an S Corp. But we're talking about those that are filing only on the individual return, because a single member LLC, which is a disregarded entity, and all that means it doesn't file a separate return. So it has a tax ID number, and if you're running a sole proprietorship, a business, if you will, then that's going to go on Schedule C. But a single member LLC can also own real estate, which would go on Schedule E, and a single member LLC can be Schedule F. And guess what else? A single member LLC can own investments. So what I want to really then focus in on is, as we're talking about single member LLC, which now you can see can be anything, we're focusing in on what is on Schedule C. That is the sole proprietor. So when you're doing your PPP application, you're going to base it off of that Schedule C, and it needs to be based on 2019. Now, you also have the choice to go with the last 12 months. So if you're going to go with the last 12 months, you really need to have a P&L that's going to pull in April 1 to March 31st, 2020. If you're going to use a Schedule C, then it's going to be calendar year 2019. Now, a lot of questions as it relates to how they are able to apply. What is it based on? So you are applying at the top of that application by checking the box that says sole proprietor, single member LLC. And you are going by line 31 on the Schedule C. That is the net income. Right now, we have no guidance that you're able to do any add backs. So what am I talking about on that? If you look at Schedule C, you would have potentially mileage write-off or vehicle write-off or depreciation. If you bought new assets and you wrote them off immediately or all in the first year, you're going to have some big deductions there. So you may be looking at a loss for Schedule C. And if you have a loss, then you're not going to be able to get anything out of the PPP. However, if you have a loss because you have a lot of depreciation or a lot of auto expense, what you might consider is, do you need to take all of that this year? Because you have that election. Okay, with depreciation, you don't have to deduct it all in year one. You can depreciate it over the life of the asset, so it might be smart to do that. You might not have the loss. You might affect things for the taxes for 2019, but would it give you any net income to then get the PPP? So as you're related to on the Schedule C, that would be the line item. Now, what you'd also want to get is your Schedule F, and that's if you're doing farming. And so I've got another video on that, if that is in essence what you're looking at. But anything that's on Schedule E is not going to apply, okay? Meaning Schedule E or Schedule E page 2. Those are items that are not going to apply for the PPP because it's based on payroll. And Schedule E rental and Schedule E page 2, which is K1s from other companies, there's not going to be wages in there unless you have a very, very unusual set of circumstances with your real estate business, meaning you're so big time you pay wages. But if that's the case, I doubt you're reporting on Schedule E. A lot of questions related to the single member LLC. So you're getting 1099s. You base your PPP on the 1099s you receive, the income you receive, the income you're reporting on Schedule C. And then all of the expenses that are offset, and then the PPP is based on the net, okay? If you're paying out 1099s, doesn't matter what entity you are, but specific, if you as a single member LLC are paying things out, that is not anything you get to include in determining the amount of your loan. Now, the big question we have yet to resolve is, how do you substantiate, in essence, payroll to yourself? And that's the same for the independent contractor, the self-employed, the sole proprietor, the single member LLC. That is the big question we're waiting to hear on, is how do you substantiate that you used the loans from the PPP for the purposes of payroll costs when you are the only payroll cost? So I've got some theories on that, but it'd probably be better just to wait and see what the final guidance is on that. Now, with a single member LLC, just as an FYI, if you're talking just briefly, if you're talking about a single member LLC and it's an S corporation, because that is allowed, the S corporation would be able to apply on its wages, including the wages of the owners, not to exceed $100,000 for each employee. But the distributions from a single member LLC S Corp does not qualify as payroll, therefore it does not qualify for the PPP. Box 1 of the K1 from an S Corp by statute is not self-employment income and therefore is not included. So when we're talking single member LLC and you're talking about Schedule C, those deductions are going to reduce down your income, and then that net income, line 31 on Schedule C, that's what you're going to use. All right, hey, get that information and get it into the bank ASAP, because you need to make sure that you're in line. And then any other questions that you have, bring in the P&L, bring what you've got, the LLC and those documents as it relates to the single member as a sole proprietor are not as key or as important unless your bank says that it is. So I actually think it's going to be easier for self-employed individuals to apply and get the PPP, because you're just going to walk in and say, hey, here's my financials. And I'm going to divide that by 12 times 2.5, and there you go. Get in the bank, single member LLC. You're definitely a sole proprietor. Good luck. And then remember this, you've never met a CPA quite like me.